With the 2020 election exploded, many investors are asking themselves, what's next? The 4 years had become uncertain. On top of that, the nation remains divided. So it's now more critical than ever for traders to look for long-term stocks that offer reasonable returns without too much risk. Welcome to Money Highway channel. Today we are gonna discuss high growth stocks that will blow up in 2021. Make sure to watch till the end, who knows, maybe you end up a millionaire at the end of 2021. Today we discuss millionaire maker stocks, high potential companies with enough ability to guarantee a significant position, a 10% position in a security that increased 50 times. After all, will turn a 200,000 portfolio into a 1.2 million. That's why millionaire maker companies are vital for investors. So, with the election now passing, here are 5 of our favorite long-term stocks that will blow up in 2021. Let's start our top with Lyft. Because of all the confusion caused by the presidential election, it's easy to have overlooked different voting methods. California's Proposition 22 on election day, the state's voters gave a ballot proposal allowing ride-hailing companies to classify workers as contractors rather than full-time employees. This is a huge win-win for Lyft. That's because it's building a roadmap for the company and its opponents to build out a gig economy workforce. Following the new rules, workers now have access to a middle path, employment status that gives part-time workers secured minimum payments, healthcare, occupational insurance, and life insurance benefits. News comes at a middle moment for Lyft. Unlike its bigger competitors, Lyft stayed in ride-hailing rather than diversifying into food delivery. That meant its ride-sharing business endured far more during the pandemic. Revenue narrowed from 867 million within the second quarter of 2019 to merely 339 million in Q2 of 2020. Today, shares are falling over 50% since the company's first public offering IPO in 2019. That offers investors a golden opportunity to invest in an up and coming company. Analysts expect Lyft to join position EBITDA in 2022 and for the general market to raise eightfold to 5 billion by 2030. Since the novel pandemic subsides, that means at just 12 billion in market capitalization, Lyft stocks looks like a real steal out of all the long-term stocks. Moving on, next, General Electric. General Electric, which makes much of its profit from jet engines and medical imaging devices, has also been hit hard by the pandemic. With fewer aircraft in service, demand for its lucrative spare part division wiped up. And to aggregate GA pandemic woes, hospitals also put off adding new MRI and doctor scanning machines as the novel pandemic raged. But don't assume these short-term problems will last forever. That's because after years of shedding underperforming shares, GA finally has a healthy mix of wide moat businesses. The company holds a vital portion of the world industry in jet engines. This highly profitable aviation business generated 21% return in 2019. As for healthcare, GA stocks gained 20% returns in 2019. The legacy industrial company has also been following its usual power segment with renewable energies. The company presents on offshore and onshore wind, blades, hydro and grid solution. Ultimately, at 4 times EV to EBITDA, GE stock is priced very low. That makes General Electric one of the long-lasting stocks sharp for a robust 2021 recovery, no matter the economic uncertainty. Following next, it's Etsy. Etsy is a famous US e-commerce site, has been an enormous winner in 2020. Shares have rocketed 185% year to date, as both buyers and sellers have come to the place for custom handmade and vintage goods. However, the company can track its success back even further before the pandemic. Etsy has grown earnings and been profitable since 2016. Its e-commerce platform operates in a worthy cycle. More sellers coming onto the site also encourages more buyers and vice versa. Moreover, Etsy was quick to compete with eBay on ease of use. In 2016, the company got Blackbird Technologies to add AI-driven product support. In 2019, Etsy habitual buyers jumped by 23%, and the company has more place to grow, with an 18 billion business value. Etsy is only 50% the size of rival eBay. The company, of course, will have to manage growing pains, its established take rate, and 100 sellers over changes, and its advertising policies. But if the company can't continue developing its product offerings, it could convert into the next e-commerce success. That makes its stock one of the most significant promising long-term stocks on the market. Going forward, we see SolarEdge. With so many money-losing solar companies on stocks, it's hard for investors to know where to start. For example, photovoltaic PV panel makers like First Solar compete against Chinese makers. Rock bottom prices. Contrastingly, solar leasing companies like Sunrun waste money on debt service. That's where SolarEdge enters the stage, a specialty provider of power optimizers, solar inverters, and monitoring system for PV arrays. These are natural components to getting the most out of solar panels, and that's supported the SolarEdge churn out of profit year after year. The company has finally made money since 2015. It now earns a 14% return on invested capital, light years ahead of other solar players. Sedge Stocks has also played well, returning over 1,200% in the past 5 years. What's more, following the International Energy Association, solar power generation will be the main driver of growth in renewable energy, heading towards 2040. Countries look to decrease their dependence on fossil fuels. That only suggests the demand for SolarEdge product will proceed to grow. Like most solar companies, and compared to other long-term stocks, Sedge isn't that cheap. At the moment it trades for about 57 times EV to EBITDA. But if the company can keep rolling the wave of solar investment grow, its earnings will skyrocket. And finally, the dessert, Splunk. Rounding out our top stocks for 2021 is Splunk, a rapidly growing software company. This San Francisco-based firm practices analyzing machine-generated big data and has been rolling 50% annual recurring revenue growth through Q2 this year. Why such shift growth? Splunk underlying market is growing fast. According to Gartner's research, 25 billion devices are already attached to the internet. Analysts expect that figure to nearly double by 2025, and that's where Splunk comes in. The company's data to everything platform supports customers to gather and manage data from connected devices. It's a massive growth market with companies like Nvidia and Tesla fighting for their space share. There's just one drawback to Splunk: it isn't profitable yet. To grow its customer base, the company pays much of its profit on sales and marketing. That number should decrease over time, but as existing customers renew contracts, long-term shareholders, investors in SPLK stock should expect a positive EBITDA by the fiscal year 2022. So, which of these fast-rising stocks will you buy for 2021 growth? Leave your opinion in the comments below. If you haven't already, hit the like button, do it now. Likes help grow the channel, and don't forget to subscribe now. Hit the notification bell to receive more video content. We hope you enjoyed today's video. Thank you for being at Money Highway channel and see you in our next video.